All right, let's get started here.
Excellent. Yeah, thanks for having me on.
Yeah, great to have you, Jason. And to all our viewers out there watching this, this is a friend and I guess you could sort of say colleague as well, in the sense of we work together. Jason is a mortgage specialist with Scotiabank, and he is here today to just chat with us about rates and a bit of what's going on in the market, and we'll speculate on what Uncle Trump, as I've called him to many of our clients before, Uncle Trump is doing and is maybe going to do. We'll cover a bunch of topics today, but I'm looking forward to it. Thanks for coming on, Jason. Tell us a little bit about yourself.
Yeah, as you mentioned, I'm working with Scotiabank as a home financing advisor, we call it, or mortgage specialist. And you actually helped us purchase this home, which we're grateful for as well, about 3 years ago. So we have that business relationship going back that way as well. So yeah, a little bit about me. I've been married for about 8 years now to my wife. We've got three kids, four, two, and almost five. And yeah, just happy to be here on the podcast and to chat about the real estate market and where we see things going.
It's great. It's awesome. Well, you got a busy household. That's why we had to do this in the middle of the night uh, for both of us, to make sure we could get some quiet conversation going. Uh,
Absolutely.
the first question I think always pops up for people when we're talking is our interest rates. Uh,
Mm.
we saw a drop. That was the start of this month, I guess, wasn't it? Or was it the end of last month?
Yeah,
Start
end
of
of
this month, we
January.
saw a drop.
Yeah.
What are you seeing out there? What's happening with rates at Scotiabank, or what are you seeing rates elsewhere? What's going on?
Yeah, there's another rate drop forecasted. It's sort of uncertain at this point whether March 12th will be a rate hold or a rate drop, but most people are predicting a rate drop. In terms of the interest rates, though, it's not just the Bank of Canada prime rate or overnight lending rate that impacts mortgage interest rates. The bond market will also factor into that. So because the bond market has actually been going up since middle of December, we've seen those fixed interest rates sort of actually rising a little bit. So um, just something to bear in mind as we're considering that purchase.
Great. So why don't we dive into that a little bit more? Where are you seeing fixed rates at currently for sort of around that 5 year term? And what are you seeing variable rates do right now?
Yeah, right now, in terms of fixed rates, 5 year, if we're talking default insured, so less than 20% down, then we're somewhere around that 4.25, above 4% still. And then on the uninsured side, if we're going, 20% or more down for the down payment, then we're right around that 4.5, 4.55, something like that. So, the rates have come down since about a year ago, but still a lot higher than what most people locked in 5 years ago during COVID, right?
Right, for sure. And are there any
Oh,
recommendations that you would have for those folks who are maybe coming up for renewal this year, or maybe even, late this year or early next year, where they're going to have to deal with, a 2.5% increase in rates? Any recommendations on how to approach that?
yeah, it is difficult, and it's budgeting, right? In terms of the government, what Canadian government has been doing to try and ease lending restrictions, they are opening up first-time home buyers to be able to go to 30-year amortization and those types of things. So people entering the market as first-time home buyers, the government's trying to make it a little bit easier. Where you'll have those pinching pennies is really when you did buy and lock in a really low rate during COVID. And at that point, it really does come down to budgeting, right? There's potential for refinances if that's something that could help to extend that amortization back out to maybe 25 or 30 years. But that is something that you would have to qualify for. That's something that you'd have to look at with a mortgage specialist. So
Yeah, yeah, that's right. Yeah, I mean, it's definitely a time coming up that's going to be a challenge for some people and
yeah,
having to adjust and whatnot. But
yeah.
in the grand scheme of things, long run, that
Hmm.
4.5% is a decent rate.
Yeah.
I
If you
remember,
zoom out to 80 or 100, yeah, definitely.
yeah,
Yep.
I remember my
Yep.
parents talking about buying their first house at a rate of like 18.5%. So I don't
Absolutely.
think we have anything to complain about at this point.
Well, prices maybe.
Prices keep going up, and that's just what it is. I mean, our
Yeah.
house prices here in Calgary continue to remain uh, as one of the stronger, but by stronger I mean best house prices to get into
Yeah.
compared to places like Ontario and BC. What we're seeing as far as our benchmark price is still fairly reasonable.
Yeah.
The last couple of years definitely shot it up, but again, looking at big picture always can help us change sort of our perspective. And in this
Mhm.
case, yeah, grand scheme of things, looking at the big picture, Calgary's still doing okay.
Absolutely. Yeah. And hopefully, the federal government, people are always campaigning on the platform of we need to deregulate and encourage house building. And I think that increase in supply will help with prices, just level them out a little bit. So I think
Good.
that would be really good.
Yeah. And speaking of federal government, I guess, uh, transition into, what are you hearing through your connections as far as tariffs go? I know that's one of the big words right now because everybody wants to know what Trump's going to do with tariffs, and no, none of us really know what's going to happen with any of that. So
Yeah.
disclaimer, I appreciate your feedback, but I also know that the
Yeah.
reality is none of us really know what's going to happen. But uh,
Yeah.
what are you hearing as far as sort of worst case scenario, best case scenario, when some of this might transpire, and what the finance world is thinking about it?
Well, the interesting thing in terms of real estate market and mortgages is that the economists that I've been listening to and hearing speak on the topic are saying that if these tariffs actually come into play, because they really haven't so much yet, but if they do, then we could see the Bank of Canada decreasing rates to as low as 1.5%,
Mm,
which right now we're at 3.25. So that would be a huge decrease, but just doing that to try and stimulate the Canadian economy and to stimulate investment in the economy. So it actually is interesting, but it could be good for borrowers for
yeah,
these tariffs. On one side of the equation, then you have to factor in how much of your income is actually going to the increase in your prices for everything that you're buying, right? So,
yeah. Our economist at Krebs spoke in January, and I put out a video for our clients, just chatting about that, and she based a lot of her stuff off of ATB's economist, and
mm,
really what sort of that collective group is saying is that even if Alberta got hit with the highest amount of tariffs, their
yeah.
their expectation in that case would actually only be about a 0.3, I think it was a 0.3% decrease in home values for this year, which
Mm,
is negligible, right? Like
yeah.
that's a wash. And
Yeah.
so I think that's a really good thing for people to take into account and to think
Hmm.
about when they are um, looking at this process. I hear a lot of people saying right now, "Oh, I'm just waiting to see what's going to happen with the tariffs." And
Hmm.
on the I appreciate your feedback on this. Love to hear what you think. But like
Yeah.
on the positive side, if you think, okay, I'm not going to wait, um, I'm just going to purchase now. The worst case scenario seems to be touted from ATB and others that um, that really you're not going to see a decrease in your home value if you purchase now.
Yeah,
Whereas, the worst case scenario could be that you wait and actually the typical Calgary spring market hits, and
yeah,
next thing you know, we've gone up to 2-3%, and that home you were trying to purchase at 500 is now 515 or 525, right? And so it's
yeah,
I never want to push people into uh, to
yeah,
buying, purchasing,
yeah,
or anything like that. But what I'm always encouraging people to really think about is what is the discrepancy between worst case and best case scenario.
yeah.
And from what I'm hearing, and it seems like what you're hearing, that discrepancy is very small, at
Hmm.
least for Alberta, which is
Yeah,
a great is great news for us.
right. Yep. And that short-term decrease, that's going to affect flippers. If you're buying a house for a 5-year term, you're not going to be worried about that 0.3% decrease. It's if you need somewhere to live, I would say just pull the trigger on it,
Yeah,
right?
for sure.
Yeah.
Good. Well, I appreciate your insight and thoughts on that. I would love to hear, a lot of times, to be honest, we're touting as realtors, we're touting mortgage brokers,
Hmm.
but I think often we forget and miss the fact that you guys at the big banks have some really great offerings because just lost you. Oh,
Oh.
it just pushed me out of the screen. Um, as I was saying, you guys at big banks can offer some things that mortgage brokers can't find. And
Hmm.
so tell us a little bit about some of the products you guys have that you're really excited about, that you think can benefit Canadians during this time.
Yeah, absolutely. Well, in terms of the comparison there between the broker and a mortgage specialist, the brokers are often even going with Scotiabank
Mm.
as their the best rates right now. So
Very
that's
good.
that says something about the relationship that we have with brokers. In terms of mortgage products and things that can be helping people, there's great products and the great incentives for what we call purchase plus improvements or a renovation mortgage. So the government, including the municipal, the city government, has incentives to stimulate creating new housing with existing structures. So what you can do with these renovation mortgages is get the mortgage to buy the place, and you can get the mortgage. We can finance renovating into maybe a basement suite or adding something like a laneway suite or something like that, right? So that will help people with paying the mortgage, can rent out a little bit of the space there. I'm seeing a lot of folks doing that. Other than that, it's pretty standard. Really, what we would be looking at is just different ways to help you qualify, different ways to look at your income if you've got self-employment income or anything like that. There's programs for people who don't think that they can qualify, can often qualify, and there's something for everyone.
Yeah, that's great. I mean, you and I talked about that a little more in depth a little while back. Being somebody who's been self-employed for so many years,
Yeah,
and when I talk to people who are self-employed, it is a challenge.
yeah,
You usually have to have that at least 2 years, and most lenders, sorry, 2 years of sort of taxes and everything in place, and a
hmm
lot of lenders shy away from that, are not kind with that. And
hmm
when we chatted, I was really impressed by the products you had talked about, and the ability that Scotiabank has as a big bank to be able to say, hey, look, we have faith in you as a small business owner, and we're going to make that happen for you, if you've got everything in place. So that's great.
absolutely.
I
Yep.
think one other area I'd love to hear about is sort of uh, that demographic that is thinking about and looking at downsizing. Do you have
Mm.
anything in your product um, spectrum that can really talk to the downsizer? Maybe particularly, I'm thinking about some of the clients that I've worked with where they're downsizing, they're no longer working.
Hmm.
So maybe they've retired and now they're just on a set income, but they're looking to downsize and they still want to purchase.
Hmm. Yeah. Well, the first thing I would say is that we can use things like CPP and OAS for qualifying for a mortgage. And oftentimes, if you're downsizing, you've probably got some equity in your home and possibly some savings that you'd be able to or interested in putting down for that house. So there's often a scenario that makes sense for you to even finance a little bit of the purchase if you need to do so or if you want to do so through the bank. And we can look at the old age security and the CPP. In terms of other scenarios, we've got Scotiabank has a product called a STEP, and other banks will call it a HELOC. It's not a one-to-one, but having that equity built up in your existing property, you can actually leverage that to then go ahead and purchase your new property, and then go ahead and sell the original property, the property one that you're currently living in and downsizing from. So there's some flexibility there for time frames, which we often see people not wanting to, sell their house so that they can purchase, and then where are you going to live in between, right? So
Yeah.
there's scenarios there that can make sense for a lot of people.
That's great. I mean, that's a huge question these days, with there being such a uh, small number of properties available, and so a lot of people are asking the question about how do we how do we create that overlap? So that's great,
Yeah.
good stuff. Well, anything else you would love to just let people know about? We covered most everything today that you'd like to cover.
Yeah, I would say if you're in the market for purchasing a home, it's great to go to a branch and go to a bank that you work with or a broker. But having someone alongside, just like yourself, you specialize in purchasing homes. A mortgage specialist will specialize just only solely in financing those homes. So they know the details, they know the nitty-gritty, they know all of the programs that you'll be able to have access to, and they'll be able to find the solution the best way possible. So yeah, I think that that's a good advantage that we have.
For sure. Well, Jason, thanks for being on with us today. Appreciate your time and the late hour that of which we are connecting. Um,
Absolutely.
if any of you want to connect with Jason through social media, you can find him at on Instagram at Talk On with Rochon. We'll try and put that down in the email as well, and we'll also have his contact information there for you also. But highly recommend Jason and the work he does. So if you'd like to reach out to him, please do so. On the finance side, he's got you covered. Of course, we've got you covered on the purchase and sale side. Love to sit down with you. We know spring's coming up, and maybe you've got plans. If you do have plans, let us sit down with you early on so we can help walk you
Yeah.
through it. As you know, Debbie and I always want to make sure that you're thinking about all the scenarios and thinking through them correctly, but also what else there might be that you're not thinking about. Maybe we can also see those things. So happy to sit down with you, give you a bit of a home valuation and see where things are at for you. If you're thinking about just jumping into the market, call Jason first, get a pre-approval going with him, and then we'll get you out on the market. Thanks for tuning in today, everybody. And again, thanks to Jason. Everybody, have a great week.
Thanks, Kelly.